Okay, so what kind of situation do we currently have on Euro JPY? Now, on the daily time frame, we clearly have a market that has created a strong impulse to the upside. Now, after this, what did we say? We said on the weekly time frame, clearly the market has created an overextension down, up, down, up. So, overextended W formation to the upside. After an overextended W formation, you definitely want to see the market make a retracement. Now, if you want informations on that retracement, what are you supposed to be doing? Taking the Fibonacci on the impulse. And what we can see that we are very near to approach the 50% retracement. So let's put a horizontal ray on it and let's move back down on the daily time frame. Now, on the daily, what we can see after the impulse, we definitely wanted to see the move to the downside, if you remember from the analysis. And the market has now started a beautiful move to the downside, so impulse, correction, and continuation to the downside. And in doing this, what it is creating, it is creating this M formation. Now, after an M formation, what do you want to see? You want to see a retracement to the neckline. Now, if the retracement will happen from here, or the market will actually manage to go all the way down here to the previous resistance turn support from a daily perspective, that we don't know. But we don't need to know it because trading is not predictive. Trading is reactive. So let's just highlight this zone. And the more the market will go down, the better it will be because when the move to the upside will start, we will have a better risk to reward to the downside. And I will now show you how we have to be approaching it. But first, let's go and see what kind of situation we have from a COT perspective, so commitment of traders, what big banks and institutions are doing on the euro and on the JPY. Let's start from the euro. Now, on the euro, what we can see as we have seen already in the previous analysis, that we went from minus 114k net positions. So from having way more shorts than longs from an institutional perspective on the euro to having 95k net positions. So way more longs than shorts, with 10k longs added only in the last report, with 184k longs and 89k shorts from an institutional perspective on the euro. And if we go and see what we have from a JPY perspective, which I have here, what do we see? We see that overall currently we're sitting at 17k in the long term. Okay, we went from a negative positioning to a positive positioning, right? So in the long term, a GPY has been getting stronger. However, in the short term, we can see a decrease of net positions from 34k to 17k, with 2k shorts added only in the last report and 13k longs closed. So they're starting to taking their profits on the GPY longs. Now, during the move to the downside, okay, we have seen a lot of GPY longs added, right, during the move to the downside, and they're starting to close them. As we have just seen, they close 10k longs on the GPY, meaning that GPY can get weaker to complete the information exactly as we wanted to see completed. Now, from a 4-hour perspective, what kind of situation we have? We have a situation in which the market is clearly moving to the downside, okay, with lower lows and lower highs. Now, if you have a situation in which the market is creating lower lows and lower highs, do not be looking for longs, okay, because it's too risky unless you want to try to catch exactly the low. So the way in which we will be approaching this with students is, as usual, being reactive and not predictive. We will be monitoring price action from a 4-hour perspective during the move to the downside, waiting for the market to shift from a bearish market to a bullish market, and only then we will start to monitor, to wait on the 4-hour time frame for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside, and the completion of the M formation at the neckline, aka the previous support, here now turned resistance. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.